SecondSkiesForex.com. So we had done a video a few weeks ago on channel trading and one of the techniques that I use to work with channels. We saw that again here. This is just another highlight of that to show you how the technique works and how it plays itself out. It worked on a couple pairs that have formed channels this week, Aussie dollar and pound dollar. So you can see we have this double touch on the top and double touch on the bottom. The technique goes like this. What we're looking for is we create a third parallel line and we put it right in the middle of that channel. The reason why we do that is we use this kind of as a filter to communicate to you as traders where the market is likely, or where this channel is going to likely break out. This is an ascending channel in an ascending market, so traditional wisdom and patterns would have suggested that we wanted to be looking for a breakout to the upside, or possibly putting on positions here or even here, because expecting this channel to continue and break to the upside and another move to the top. But this, if you trade traditional channels, which is that after you have your two touches, you trade the channel and try and get it to the midway into the upper point there on the other side of the channel, that would have failed you right here. And this technique would have avoided that. In fact, it would have put you in the right direction, trading the break of the channel before it actually happened. So what we do is we draw a parallel line, put it right down the middle, and then what we're really going to do is looking at price in its relationship to this channel that's now been split in half. And the reason why we do that is we're looking to see what the market is communicating to you as traders. Where is its natural tendency? If it has more price action in the upper region of the channel, then its tendency is going to want to break out to the upside. But if it has more price action in the lower portion of this channel, it has a much greater tendency to break to the downside. So if you were looking to place longs in this technique would have kind of communicated to you to avoid that. In fact, it probably would have put you in the short direction, not the long direction. So as you can see, look at where most of the price action is. You have this little amount here, a few candles here, and then you have a few candles here. We have this section here, but then here, and all this right here. More price action is below or in the lower half of the channel than the upper half. One of the other things about drawing this midline in the channel too is that channels have a tendency on their failures. That means when they try and make it to the other side and they fail and then break out of the channel, oftentimes, more often than not, they're going to fail at the middle point of that channel. So not only does this communicate to you as a trader where the market is going to likely turn and break out of the channel, but it also communicates to you, it also gives you a possible entry and exit point, so to say. So our system got us in short right here as designated by the arrow, just under 93. This is a live chart. As you can see, price is moving. Here it is, 91.52, 91.50 now, about 150 pips later. And that's part of the system, and then also part because of the channel technique. Now there's another example of this on the pound US dollar here. This is a 2-hour chart on the pound US dollar, and it had formed a channel right here. So here is your channel, and what we do is, again, we apply the technique, creating a third parallel line, and we put that right down the middle. And you can see this one clearly had a much greater tendency to want to be in the lower half of the channel than it did the upper half, suggesting that even though this was an upward sloping channel, that a breakdown was more likely. And you can also see how the halfway point in the channel also offered the failure and the resistance for this thing to sell off. So as you can see, this is what happened. Our system had actually got us in just around 67.50, as you can see by this arrow. And again, this is another live chart at 66.07. So we are still in this trade about 156 pips later. So that's pretty much it. And so just highlighting again the techniques of the channel and the tactic that we use here. You draw, once you have your channel in place, draw a third parallel line, put it right down the middle, and then where price action has a greater tendency to reside in is the greater probability chance of the direction that it's going to break out. So if you have any questions about this, or if you'd like to learn about the systems that actually got us in these systems, about 130, 150 pips on each pair, if you want to learn these systems, they're taught in our Second Skies Pro Forex course. So you're welcome to check that out, SecondSkiesForex.com. You can also email me directly at info@2ndskies.com. I always look forward to hearing from you. Until then, I wish you all good luck trading. Take care, everyone.